Today is Wednesday, September 9th, the day before rollover in the ES Minis contract. We are going to be looking at some of today's trading setups from the perspective of E-mini volume profile day trading, which is our blog, which all you viewers are welcome to go and see a number of our past videos and charts and tutorials in which we've been looking at trading the market profile volume-based trading paradigm and looking at a lot of different ways to identify high reward, low risk trade setups. Now we're going to look at today's trading in a little bit more zeroing in than we have been in the previous videos. So we're really starting a new phase here, and we're going to look at this how specific trades set up and how we go about evaluating action from the open as soon as trading begins at 8:30 Central Time. Now the first thing you want to notice here is I'm looking at a 15-minute chart. Now the first thing we do as soon as it opens is we look at how price is reacting to the value area that has been established from the prior day's trading. Yesterday was a very slow, narrow range day, and this is the value area high and this is the value area low, and the point of control is very close to the value area high. This pink line here and the two olive lines are the value area high and low. So what we saw is we had the point of control, this little pink dot here, point of control, the first 15-minute bar right here. You're supported on these moving average lines, and the market opened up and it opened and went down, and a lot of volume came in right there. You had a lot of volume, and it was negative delta. So on the 15-minute chart, not a real obvious setup, but what you're looking for here is if it opens above value, goes down into value just below the point of control, and then goes back out of value, that is a setup to go and buy. So this is where you look at your shorter time frames and see if it's validated by the volume. And you can see the volume picked up very strongly as soon as this 15-minute bar closed, and you'll notice that it penetrated the point of control, but it closed above the point of control. And you want to see if you can get in, if it's going to go back above this high, and it's well above value at that point. As soon as it gets the other side of the open, it's probably going to break out. So let's see what it did on the shorter time. Okay, now we're looking at that point when the first 15-minute bar held above the point of control by the time it closed, and how there was a heavy influx of volume there close below the point of control. And this is what you could see on the 4-minute chart during that first 15-minute bar. Basically you had a pattern that we see where the low bar was very high volume, the next bar had an equal low, and the delta reversed positive. And then it was a question of what's going to happen on the retest. The retest had very diminished dominance of delta, one tick above equal low, and it became a doji, almost a hammer. So that's an indication by the close of the third 4-minute bar that the retest was weak. Now over here on the 8-minute, so 16 minutes after the open, now you have an engulfing bar, well, not actually, but one tick equal. It's pretty much the same as an engulfing bar on positive delta. So you have enough there to say that you definitely want to take the breakout if you can get back above that opening, above the open itself. And that's exactly what happened on very increasing volume, and you can see that increasing volume on the 8-minute and increasing delta, strongly double or triple the delta reversal on the 4-minute bar. The breakout was confirmed on increasing volume each 4-minute segment. So that's how we look at it. It's always hard to take breakouts, I think, for a lot of people anyway. And you're really have to you really have to look at this setup as a well-defined target of support, because you opened above value and you're looking for whether it's going to get back into value and be accepted by the time that first 15-minute bar closes, or if the value area is going to reject uh, any attempt to stay inside of it as the buyers are going to take over. And that's what you had in the second 15 minutes of the day. Now, broken down into the 8-minute segments and the 4-minute segments, you had 3 bars to confirm your evaluation of that pink point of control holding, which it did very clearly. The 4th bar just took off and exploded away from it. You're back above value by the end of that 16th minute. So you have a confirmed breakout, and in this case it never went against you more than a couple of ticks, as it took off and gave you a very quick 4 points here. So this is how you can use the multiple time frames of the delta and volume evaluation to deal with a breakout, and to deal with how you trade quickly after the open. A lot of people don't like to trade in the first half hour, but the way the market's been trading the last few months, if you don't trade in the first half hour, you're going to miss a lot of trades. It's just been very common that most of the activity has been coming in the first half hour and the last 45 minutes. So a lot of people don't like trading either one of those time frames, but if you don't, the S&P Mini is providing a lot less of a possibility for profit during the other hours. They're just becoming very slow. So it's nice to have this tool that can give you a distinct advantage over anyone who doesn't use it. So as we can see how that breakout developed from that point on, it's the same old story. We find that on the high 8-minute bar, the bar made a new high. It created a doji. You had a delta reversal on the 8-minute. You go over and look at what you saw on the 4-minute, and that gave you the opportunity to get in on a shooting star, a hanging doji there. It made a new high, and very strong divergence of delta from the high of this bar, which was on the highest delta and the highest volume. And on the attempt to take it a couple of ticks higher, they were rejected with this hanging doji on a complete reversal of the delta. So very excellent selling opportunity, very close to the high, 3 ticks away, almost minimal risk, and easy to get filled in there around the 30 area, and it quickly dropped to 27 and a half, 3 straight 4-minute bars straight down. So that was an excellent trade, again, in the environment that we've been looking at, and we can see how it progressed from there. Now if we looked at this price action on a 15-minute chart, you'll notice that all the delta stayed positive, although the volume was dropping rapidly, and very difficult to trade on the 15-minute. But when you come over to the 8-minute here, you'll notice that this pullback was very weak, and that the volume diminished on each bar of this what you would call a very minor correction, and the doji there becomes more of a buy signal than anything else, as the delta evened out on that retest there of this first probe down. So the retest couldn't even get that close to the low, and the delta reversed. Over here on the 4-minute, you can see that the reversal doji here was on equal volume. The volume had really dried up. There just wasn't any will to push this lower. It was very, very obvious looking at this that nobody was going to push this lower, and you just get in and put a very small stop. You could risk 4 ticks and have a chance, see if it would get back to the highs, which it was a couple of points, but trailing stops on the 4-minute, you got this breakout, which was then clearly confirmed. Very strong upward volume, and the peak volume right here at the high.